Hi guys, this is Mr. Charles Chang, the Chairman and Managing Director of BesiCo. Recently, Mr. Charles received an email from company's auditors stated that, Dear sirs, as we are in the closing phase of your 2016 account, my team of auditors are facing some issues of which your management responses are needed. We must express an adverse audit opinion if no satisfactory evidence is received. Mr. Charles was very annoyed by the auditor's decision. Therefore, he called CFO Win and said, Win, I want you to prepare me a report on how the finance department would handle the audit queries so that it could properly address the auditor's concern during the next audit committee meetings. Right after being told by Mr. Charles, Will told the team members, Haikal, you will answer the first queries. Second queries Dina, third queries will be Farhanah, fourth queries is Riduan, and the last queries is Norazlin to answer it. Hi, my name is Muhammad Haikal Hafiz bin Rumaizi. I will answer the audit queries number 1, which is how we assess the company ability to continue as going concern. First step, we have identified 3 situations that have negatively affected the group's result in reporting period. First situation is the influx of lower price steel product. Second is foreign steel producer dumping activities. And the third is tightening measure implemented by Bank Negara Malaysia to prevent rising household debt. Okay, because of the previous situation, there are several material uncertainty that cause significant doubt on the company's ability to continue as going concern, such as decline in revenue, impairment of receivable and inventory, heavily indebted, and product demand decrease. In order to mitigate the impact, we have taken several actions. First, we have ceased production and closed store to manage our available cash reserve. Second, we obtained a restraint order against our creditor for any proceeding against Giant Steel. Lastly, we have sent an invitation to investors to raise additional capital. Although it is not certain that this effort will be successful, we has determined that the action has taken are sufficient to mitigate the uncertainty and has therefore prepared the financial reporting on a going concern basis. To answer about our future plan, we would like to secure huge investment fund from foreign investors and invest in digitization to cope with the changes and opportunities made by fourth industrial revolution. Digitization will focus on 3 things, which is supply chain integration, order management, and demand forecasting. That's all from me. I will pass to the next presenter.
Meanwhile,
Dina, I want the answer for query number 2 now.
Hi, my name is Dina Fitraizza and it seems like I have some work to do. Let's start. Audit query 2. BesiCo has recorded deferred tax asset of RM378 million despite of having losses. How can BesiCo justify the appropriateness to record deferred tax asset in balance sheet? According to MFRS 112 income taxes, a deferred tax should be recognized for carry forward of unused tax losses until it is probable that future taxable profit will be available to against unused tax losses and unused tax credits. A company needs to consider the criteria in order to assess the probability that taxable profit will be available when there is taxable temporary difference. Next, there is taxable profit before the unused tax losses expired, and lastly, there is tax planning opportunities.
1 hour later.
To answer, since we have past losses, we recognize a deferred tax asset arising from unused tax losses until BesiCo has taxable profit will be available to against the unused tax losses or unused tax credit can be utilized by us. Also, we will assess our unrecognized deferred tax asset at the end of every reporting period. That's all from me. Next, I'm gonna pass to my next team member.
Assalamualaikum, and my name is Noorfarhanah binti Ali. I am one of the finance department team members and I gonna explain on audit queries number 3. Despite the evidence of impairment towards the group's property, plant and equipment, we were unable to ascertain the appropriateness of its reported balance at cost basis as well as its revaluation reserve. According to MFRS 116 Property, Plant and Equipment, as at initial recognition, the cost of BesiCo's property, plant and equipment is measured at fair value. If the cost not measured at fair value, its cost is measured at the carrying amount of the asset given up. As at reporting date, BesiCo's property, plant and equipment, whose fair value can be measured reliably, shall be carried at a revalued amount. As for revaluation reserve of BesiCo property, plant and equipment, if an asset's carrying amount is increased or decreased as a result of revaluation, the increase and decrease shall be recognized in the statement of profit or loss. Next, according to MFRS 136, impairment of assets, a reversal of an impairment loss for an asset shall be recognized immediately in profit or loss, unless the asset is carried at a revalued amount. As the indicators of impairments of BesiCo plant, property and equipment are the changes in the technological, market, economic or legal environment that BesiCo have involved and the plans to discontinue or restructure the operation of BesiCo. And I will pass to the next presenter, Riduan.
Thank you Farhanah for the explanation. Hello, my name is Muhammad Riduan and I will explain about the 4th audit queries. Mr. Riduan, the inventories comprise spares, supplies and consumables of 104 million which are recorded at cost basis. We are unable to ascertain the recoverability of such inventories and hence the appropriateness to report them at cost basis. Based on MFRS 102 inventories, inventory shall be measured at the lower of cost and net realizable value. The cost of inventories shall comprise all costs of purchase, cost of conversion and other costs incurred in bringing the inventories to their present location and condition. The net realizable value is the value of an asset that can be realized upon the sale of the asset, less a reasonable estimate of the cost associated with the eventual sale or disposal of the asset. The cost of inventories may not be recoverable if those inventory are damaged, if they have become wholly or partially obsolete, or their selling price have declined. The cost of inventories may not also be recoverable if the estimate cost of completion or the estimate cost to be incurred to make the sale have increased. Thus, the practice of writing inventories down below cost to net realizable value is consistent with the view that the asset should not be carried in excess of amount expected to be realized from their sale or use.
Thank you, Riduan. For the last query, in regards to onerous contract, no provision has been made in relation to the offtake agreement between Giant Steel and Besi DRS Minhat for the supply of steel products. The agreement had stated that Besi DRI was free to dispose of the steel products not taken up by Giant Steel, and Giant Steel was to indemnify Besi DRI for losses suffered from such sales. As referred to MFRS 137 provisions, contingent liabilities and contingent assets, if an entity has a contract that is onerous, the present obligation under the contract shall be recognized and measured as a provision. In our case, the provision cannot be recognized as there was no probable that an outflow of resources embodying economic benefits required to settle the obligation. This due to the excessive dumping activities by foreign steelmakers. Giant Steel had been operating intermittently and ultimately suspended its production in March 2016. Giant Steel was not encouraged to resume its operation because there were no new orders since January 2016. This shows that outflow of economic benefits was removed. Thus, the onerous contract was considered as void for financial year end 2016 and no provision needed to be recognized.
We hope we justified all the queries, and that's all from us. Thank you.